Okay, so we have come back to doing tax health check. We want to be able to do our audits ourselves before GRA comes in. So when we do our own audit, we'll be able to identify all the exposures. Then we take steps to manage or to block or to avoid those exposures before GRA comes in and give us a huge tax liability. So the tax audit functionality does VAT audit, withholding tax audit, PAYE audit, and corporate income tax audit for us. We are starting with the VAT audit. We come to the VAT, and then always we start with the business information. We go to our business information. You go to our business information and opens the page for us to populate. So we can start. We always need to start with your name of your company will come automatically. Please, you have to select the industry you're operating, because the industry will determine whether you have a communication service tax, the tourism levy. We have 3 industries in TaxMate. The reason is this: we communication service industry will have communication service tax. Then tourism industry will have the tourism tax. Then any other industry will have the same standards, the standard VAT that we have. So it won't have any VAT attached to their taxation. So that's why we have only 3 industries within the within TaxMate. So we select. So let's the one we are using communication. So communication service industry. And what service are you providing? We are providing communication service. All right. So we at the standard VAT, you need to determine whether you file return on standard or flat. But here the system is able to determine by itself. The reason is if you select service, automatically it is standard. And if you select goods, and the system will do analytics to see whether per the law you are supposed to file returns by standard or not. So if you did file on the charge VAT on flat rate, but per the information you provide, you ought to have done it on standard. The system will use standard so that you'll be able to know the exposures that you are open to. Exposures that you are open to. So your prior year's category you need to provide. If you were standard in the prior year, definitely you have to be standard in the current year. But there's possibility that you can be flat in the prior year, and because of your sales volume, you have to be standard in the current year. So the system will be able to determine all this thing for you. Then your 10, the tax office, they are information you provide. And here, that's where you want to provide information. You want to populate it on the face, on the interface straight. But doing it on the interface means that the information is not a lot, 2 or 3 or 4 or 5 that you can just populate it over here and you are gone. Other than that, if it's a lot, you have to use the bulk upload functionality so that you'll be able to upload. But the currency in which you are paying the audit, you need to show it. Then mostly depends on the currency that you file your returns. Then the year, you also have to determine the year, because some of the years have different rate. So if it was in 2020, the VAT rate will be different. 2022, the VAT will also be different. And the 2021 years will be similar, the same as that of 2020, because COVID would have taken effect in 2021. And this system is done in a manner that you can do VAT, you can do your audit from 2019 up to date. So you can do for all the 6 years in 2025, you can go from 2019 up to date. All right. So if I'm doing it on the face without uploading, I have to put in my opening balance, my VAT standard opening balance. The reason is you may be having some balances. You may be having some balance from the previous year. Maybe you have a credit from the previous year, you have to put it in here. Or you have some liability from the previous year which has not been paid, you have to put it in here. Then so for standard, for levy, and then communication service, you have to provide all those information so that the system will be able to use it to do the computation for you. Then VAT interest opening balance. If you have any interest from the previous years, you have to also provide them here. Then when you are done, very important information that you need to provide is your bank statement information. This is an area that GRA uses a lot to determine, to assess your revenue for the year. So I pick my bank statement and I have a whole lot of credits on my bank statement. And those credits are made up of either your revenue that has been paid to you, whether it is loan that you have taken, whether it was a reversal of an entry, whether it's a wrong credit that has come onto your account, whether it is a reimbursement of a cost, or a client has even made a payment to you to be paid on his behalf. So those ones are not your revenue. So, but if you're not able to segregate all this, GRA will put everything together as your revenue and then tax you accordingly. So it is important that you're able to determine this segregation. So we start with total inflow. So on your bank statement, all credit. So when you print your bank statement, it gives a summary: total credit, total debit. So the total credit, irrespective whether it is loan, any other category, just provide that information here. Total credit for the year, you put it here. Then you begin to bring the breakdown. So the credit, what was it made up for? Do you have any shareholder equity contribution in that year? Did shareholders contribute any shares, any equity? That will come at the credit side of the bank statement. So you provide it here. Then inflow on behalf of others. Those credits, was any of them on behalf of others? So someone made a payment, a client made payment to you, go and pay my taxes for me. So that one is on behalf of others. So you provide it here. Then prior year receivable. So in the previous year, your financial statement, you had closing receivable that will become your prior year receivable in here. The reason is we want to be able to know that the inflows that you have in your bank statement, does any of them relate to receivable from the prior year? We want to segregate that one from the inflows in the current, so that at the end of the day, if I'm able to take out all the loans, all the wrong credit, all the reversal, the payment from the prior year, if I'm able to take all out correctly, how much sits on my account, and I'm able to also take out my closing receivable, how much sits on my account should be in respect of revenue I have received in this current year, unless I'm able to provide a different explanation. And this is what GRA does. So loans, was any part of it a loan, and reversal of credit or wrong credit? So if there was a reversal, so you were wrongly debited and then you have been credited, it's not an income, so you have to provide it over here. So if there was a credit on your account and it wasn't for you, it was wrongly credited to your account, so later they will debit you and take the money off. So you have to provide reimbursable costs. So you made payment on behalf of others, and your partner has paid this back to you. You also need to provide. Then current year closing receivables. So at the end of the year, your receivables at the end of the year, it will serve as the opening receivable for the next year. So you also need to provide your current year closing receivable. And then you have the other credits which have not been described here, which are not income. You also need to provide. What are you trying to do? We want to strip the total credit of anything which is not income, which is not revenue, and if it is revenue, which is not revenue for this particular year. So we come down here and we can look at cost of goods not accountable for, and we also look at the deferred income. So in your account, or in your bank, even in your bank statement or in your financial statement, you have income in there which are not for this particular year. Assuming you're doing a contract and the contract is valued 20,000 Ghana cedis. All right, and it's for 2-year contract you are doing. So contract, you look at the ratio or the proportion of completion, the percentage of completion. Maybe at the end of the year you have completed 80%. All right, 80% may give you 16,000. 16,000 will be the revenue for this particular year. In this case, the 4,000 difference will be deferred income. Please, that is not an income for this year. So you need to provide that information here. Those are the system does not treat it as part of income and tax you. And when GRA comes, you also need to be able to provide this information so that they will not tax you on it. And this is why at times we have a lot of high tax liabilities, because we are not able to do all this segregation for GRA. And we have a disposal not included. You have made sales of assets. A lot of mistake that a lot of companies do is that when they do is that when they sell assets, they don't charge VAT on it. They don't charge any VAT on it. So please, asset you have sold, company asset and go, please, you have to charge VAT as the law applies. charge of VAT. So you provide all those information here. And other unaccountable sales, you have made some petty sales, that cash sales and co, which you did not charge VAT at all, and co, you did not even include it for VAT returns. So please, you have to provide all this information over here. So this gives you us information that we need to provide from the bank statement and other unaccountable information, so that the system will be able to assess your income, look at how you have under declared or over declared your income for that particular year, then prepare you, give you your tax exposures as well. So this is the first stage of information that you need to provide. Our next stage, we look at how to do a bulk upload of our information. We are going to bulk upload a lot of information: our sales, our VAT payment, the VAT returns. You put everything in a template and upload, so that the system will continue and do the calculations for us. Okay, right. So this as first, if you go to the next stage. So we'll see you in the next video. Thank you.